Welcome back, future millionaires, to Road to a Million. I'm George, your guide through the wild, wacky world of money. Hold the snooze fest. Today we're diving into a crypto roller coaster starring Bitcoin, a company called Strategy, yep, just Strategy, and Michael Saylor, Bitcoin's loudest cheerleader. Buckle up, grab your popcorn, and let's take this ride through leveraged lunacy. It's going to be a hoot. Picture this. Bitcoin's price is dropping faster than my dignity at karaoke night. The stock market's throwing a tantrum. Someone whispered recession, and now everyone's losing it. Meanwhile, Strategy, formerly MicroStrategy, more on that rebrand later, is sitting on a Bitcoin hoard bigger than a dragon's stash in a fantasy novel. They've got billions in BTC, but here's the catch. They've leveraged themselves up to their eyeballs to snag it. Over the past year, they've been slinging convertible bonds, debt and equity like they're playing Monopoly with Wall Street. It was all to the moon vibes when Bitcoin was soaring, but now it's trading like a Nasdaq stock on a bad hair day, down, down, down. And last Friday, they dropped a bombshell. High coupon preferred stock with a juicy 10% coupon. 10%. That's 2 points higher than the 8% they peddled 6 weeks ago. Desperation much? Wall Street's whispering liquidity crunch, and I'm over here like, oh honey, pass the tissues. If Bitcoin keeps tanking, Strategy might have to sell off their precious coins to keep the lights on. Untimely selling in this economy, that's a plot twist even M. Night Shyamalan couldn't dream up. Buckle in, folks, this is just the start. Let's talk about this rebrand because it's giving me life. MicroStrategy, once a sleepy software outfit, woke up and said, nah, we're just Strategy now. It's like if McDonald's renamed itself Food or Netflix became Watch. Bold move, Saylor. Is it genius or a midlife crisis? I'm leaning toward please don't check our balance sheet too closely. And speaking of balance sheets, these new preferred shares? Oof! 10% coupon, red flag numero uno. But wait, there's more. If they miss a payment, and with Bitcoin's mood swings, that's not crazy, they owe compounded dividends that climb 2% per quarter up to 18%. 18%. That's not a coupon, that's a loan shark knocking on your door with a baseball bat. Compare that to last year's convertible bonds, 0% to 2% interest, a measly $15 million expense for a company with $10 billion in Bitcoin. Now, they've tacked on $40 million from February's 8% stock, $60 million from this 10% drop, plus that $15 million. That's $115 million a year, or 1% of their stash. No biggie, right? Unless Bitcoin drops another 20%, and they're selling coins like it's a crypto yard sale. Yikes, folks, this is getting spicy. Enter Michael Saylor, the man who'd sell Bitcoin to his grandma if she'd listen. He's leveraged Strategy to the hilt, betting BTC would keep soaring. Spoiler, recession fears said, hold my beer. His latest stunt, March 8th, he waltzed into the White House with a PowerPoint, yes, a PowerPoint, called a digital asset strategy to dominate the 21st century. His pitch? The US should buy 10 to 20% of all Bitcoin by 2045 with programmatic daily purchases. Translation, borrow real money, pay interest to prop up a digital coin nobody uses commercially. Genius. He tried this on Microsoft too, promised $5 trillion in shareholder value. Microsoft's response? Thanks, but we're good. Saylor's out here knocking on doors, but nobody's buying his Bitcoin gospel. Tough crowd, huh? He's Bitcoin's hype man, preaching digital capital like it's a religion. But when the price dips and the recession scare lingers, even the loudest megaphone can't drown out the math. Let's see where this train wreck's headed next. Here's where it gets juicy. Bitcoin was supposed to be a rebel peer-to-peer payment system. Satoshi's dream. But now, it's a Wall Street toy, trading like a tech stock while Saylor begs governments to hoard it. From libertarian vibes to, please Uncle Sam save us. The iron is thicker than my mom's lasagna. Look at El Salvador. 4 years ago, they made Bitcoin legal tender, and crypto bros lost their minds. Now, January 2025, they're like, yeah, never mind. It's voluntary, not currency. And you can't pay taxes with it. Their Chivo wallet? A ghost town. 88% of Salvadorans haven't touched it in a year, and Moody's says it cost them $375 million, more than their profits. Hail Mary, fail. The commercial world, shrugging harder than a teenager asked to do chores. Bitcoin's all about price now, not utility. Saylor can pump it all he wants, but if nobody's buying coffee with it, what's the point? It's a financial asset, not money. Fine by me. Gold doesn't buy lattes either. But let's drop the future of currency act, yeah? This ain't that story. Back to strategy. With $8 billion in debt due over 7 years and these ballooning dividends, they're on a tightrope with no net. Bitcoin tanks more, they sell more coins, market sours on their debt, big trouble, the rebrand, the 10% stock, the we're buying more BTC, flex, it's all projecting strength while they're sweating bullets. Saylor's playing 4D chess, but it's looking like chutes and ladders. Pump the price, pitch Bitcoin as a reserve asset, pray the recession scare fades. It's a high-wire act, and we're all watching. Will he stick the landing or faceplant? Grab your popcorn, folks. This one's got legs. So Bitcoin's not dead, just different. A speculative toy, not money. The free market wants flexible cash, not rigid digital gold. Strategy's all in on a fraying story, and if the price dips, oof! What do you think? Saylor a visionary or a hype man past his prime? That's it for this week's Road to a Million. If you loved this crypto comedy, check the full blog post, link in the show notes, and subscribe for more money madness. Next time we're tackling maybe why my cat thinks he's a stockbroker. Till then, keep your wallets close and your sarcasm closer. George out.